Hi, everybody, and welcome to the weekly market wrap for March 2nd, 2018. This week was another tough week. We're definitely not in 2017 anymore, where the market continues to go higher in a very low volatility way. Now we have a lot of choppiness and moves in weeks of 4 or 5%. So if you take a look at this from a daily perspective, the S&P 500 chart got as high, well, I should say the ETF that we always look at that represents the S&P 500 got as high as 286. This is a daily chart back on January 26th. We got as low here at 253, which is an 11.3% decline. And then from this bottom point up to the most recent highs, it went back up 10% and then back down to our close on today, on the second, which is a Friday, of another retracement of 3.7%. So this type of action is not something that we're accustomed to, and I think I mentioned this a couple of times. Is there's something that's called a recency bias, and everybody has it, everybody gets it. It's just hard to recognize it sometimes because your memory puts more weight on things that have happened recently than things that have happened 20 years ago. So what winds up happening is that in the last, let's just call it, I don't know, 9 years or so, 8 years, we've seen the market essentially, if we look at like a weekly chart, just goes back into 2017. If we look at the monthly chart, this thing goes back to 2013. And yeah, we've had a couple of blips here and there, but overall, we've just kind of gone higher and haven't had much problem. So anytime any type of blip pops up, you just buy it. So that was our bias, which was recently for the last 7 years, 8 years, 9 years, even in some cases, some charts. You just buy the dips, it goes higher eventually, and you get saved. So now we're in a position where if you take a look at an hourly chart, like I just showed you, we have a lot of ups, a lot of downs, and we're actually not going anywhere. So if it's a consolidation and then a move to higher prices again, it's possible. If it's a sideways action for a very long time, that's possible as well. And we could even have a dip. So a lot of a lot of reasons why people sell things are triggers that really just trigger what they were going to do anyway. So for example, before the whole trade war thing came out that people were talking about, there was the new Fed chairman talk, and that got the markets gyrating tremendously because he was saying that at one of his speeches that um, he doesn't think he's going to stop raising rates just because the market's volatile. In another speech, he says, in the same speech, I don't see high inflation on wages, and then on the second part of that same speech, he says, but we do expect inflation to increase when it comes to wages and what people are earning. So these are all kind of tells that the market trying to figure out and say, okay, is he going to raise? Is he going to be a hawk and raise interest rates, which would kind of put a blunt force on the economy so that it won't grow as much, or is he going to let it go and not worry about it? So these are all things that the market's trying to figure out. And that's why we have these big gyrations. And then yesterday, President Trump came out and said that he was going to put tariffs on aluminum and steel of countries other than obviously U.S. steel companies and aluminum companies. So everybody's up in arms about how that's going to start a trade war and how that's going to be negative for the U.S. economy. And that got stocks going lower as well. So, you know, we don't know what's going to happen. Okay. So we don't know if he's going to put a tariff. He says he's going to put a tariff on him. It doesn't mean he's going to. We don't know the details of that. So it's really hard to discount and look around the corner because you don't know until you get there. So rather than try and predict, which I really think is how we make a lot of our money, is really reacting while others are predicting. So the predictors are trying to say, okay, well, Trump's becoming bad for the economy, so I'm going to sell here. And they may be right or they may be wrong, but if they're wrong, it takes them too long to admit and then react to their wrong opinion. And the people who react, in my opinion, say, hey, if the market starts going lower, my stop losses will get hit and I'll get out of these positions. So if you look at our focus list now, we took another loser this week, which isn't fun. But if you look at our focus list, we're way down on the numbers that we have on our focus list, meaning the amount of stocks that we're looking at. And that isn't because I think the market's going lower. It's because we got stopped out of a bunch of companies, and we also got we were able to take some profits on some of them. So what that means is that if the market continued to go higher, we hold on to our winners longer than we hold on to our losers. When the market's doing great, we're having a situation where we keep on adding companies. We don't remove as many as fast because they're not hitting our targets yet. So you have to keep this in mind. The way the system is set up is that we'll have less companies on the focus list when the market's not looking too hot. Right now, it's not that it's terrible, it's just not looking great. So it doesn't mean that we're going to correct another 20%, but it certainly doesn't mean that we're going to be in 2017 and prior years either. So we just got to play the cards that are dealt and not worry about predicting which cards we're going to get. So I know sometimes I sound like a broken record saying this over and over and over again, but it's the one thing that I've learned over 18 years in this business as a professional. Nobody knows what's going to happen. So to try and guess at what's happening is not going to give you a clear advantage. Putting a system into place that you know has worked and back tested over the years, that's going to help you. So we try and do that. And sometimes we get a little lucky. Sometimes we get a little unlucky, but overall we do pretty well. So I hope you guys enjoy your weekend. Up here in the Northeast, it's snowing outside as I'm doing this. So hope you guys stay warm up here. And I'll talk with you again next week. Hopefully we can get some good action out of this market. All right, thanks so much.